Crypto markets are inching higher as traders shake off regulatory troubles of Binance and Coinbase. Let's dive in further with Arca Chief Investment Officer Jeff Dorman. Welcome back, Jeff. Glad to have you again. So markets don't seem too upset about what happened with Coinbase or Binance. We saw, of course, the dive in prices after the Binance news came out, but then we saw a rebound when the Coinbase news came out. What's going on? Why this kind of reaction? Two different reactions on similar news.
Well, I think the net reaction is probably more accurate than the knee-jerk reaction, right? I mean, anytime you have any sort of headline, you're going to see algos react, especially when you have thinner liquidity. It's going to have more outsized moves. But I think the net reaction, which is basically unchanged, makes more sense. I mean, this is largely irrelevant since no one really operates in the U.S. anymore anyway. I think we've seen this over and over again in markets, which is how many times can you rally on the same news or sell off on the same news, right? 2020 is a good example. Everybody wanted us to rally every single time a new hedge fund bought Bitcoin. We rallied the first time on Paul Tudor Jones. After that, who cares? It's already been done, right? The first central bank who purchases Bitcoin. Great. Anything else after that? Nobody cares. Or the first government, rather. The same thing with the first corporate, right? The first time MicroStrategy. Great. Huge news. After that, nobody cares. It's the same thing in 2023. Like, we get it. The theme is the SEC hates crypto. We're not going to sell off every single time the SEC doubles down on what we already know. So in a global industry with perfect substitutes and low barriers to entry, every time they target a single product like Bitcoin mining in China or stable coins or any single player like Binance, Coinbase, Kraken, Gemini, you name it, business just goes elsewhere. I mean, that's macroeconomics or microeconomics 101, is that perfect substitutes mean there's no price impact.
We saw some outflows out of Binance. But what's interesting to note, I went back and looked, there has been really much of an increase in users when it comes to DeFi in all of this. I mean, was it already priced in the market? Did everyone just go, look, if you're still in a centralized exchange, you're betting on centralized exchanges surviving regulatory scrutiny. But is that kind of what's going on here? What exactly is happening with people's perception of centralized exchanges, and why aren't they going to decentralized exchanges?
Well, I think there's a couple of reasons. Well, first of all, I'm not sure that's true, right? I think maybe in a 24 or 48-hour window, it's hard to maybe measure that. But if you look at the decentralized exchange percentage of trades relative to centralized, I mean, we're at basically all-time highs. I mean, you go back to 2020, and decentralized exchanges made up less than 2% of total volume. And now you're looking at somewhere around 15 to 20% on over the last couple of months. So it's a pretty big move in just 3 years to basically take that much market share of the overall pie. So if you look at any graph, and shout out to the Block, they have a very, very good dashboard for this. I mean, it's up and to the right and has been for the better part of 3 years. So I think you are seeing more increased usage on decentralized exchanges. And I think most of that is not really necessarily due to users not wanting to use the centralized exchanges so much as it is the crackdown on the U.S. market makers. A big part of these SEC suits is talking about how, especially you go back to the Terra Luna one, it targeted specifically U.S. market makers, and they have largely left the industry. And that is a huge detriment to the centralized exchanges, where live market makers make a huge difference for liquidity, but has no impact at all on the decentralized exchanges. So you're actually just getting better liquidity on these DEXs. So I think there is a real shift to using those. But I think the other thing is there's not really a better choice than exchanges in general. What I mean by that is, if you read through what the SEC specifically said about Binance and Coinbase, amongst other things, they mentioned commingling of assets, right? And they're basically trying to make the argument that all exchanges and brokers need to be separate, and anything else would be commingling, right? Which is essentially how most stock exchanges and brokers are set up, especially here in the U.S. And they're not wrong, right? If you have a place like Coinbase or Binance that's operating both as exchange and as the broker and as the market maker, there's an inherent conflict of interest there. But the problem is it's impossible to adhere to what the SEC wants when you have blockchain finance, which by definition is T+0 settlement. When you trade with blockchain, you really only have three choices on how you trade. One is you hold your tokens at the same place you trade because you need them there in order to settle instantaneously. Two is you use some sort of self-custody DeFi solution, which we also know the SEC hates because that's the whole crux of the custody rule that they're trying to roll out. Or three is you trade OTC and settle later, which pretty much invalidates the whole reason for blockchain, right? Why do we need to go back to this T+1, T+2, T+3 world? So everything out of DC right now is either indicating that they are going to force traditional T+1 to T+3 settlement, or they don't fully understand that blockchain is in fact T+0. So, I think that's really the crossroads here is what's the point of blockchain if we can't settle instantaneously?
Jeff, I just want to circle back on something you just said about the U.S. So I know that you were actually one of the early voices talking about, projects leaving the U.S. and Arca specifically focusing outside of the U.S. So you were very prescient on that topic. You just said, though, that no one operates in the U.S. anymore, which seems like empirically maybe not that true. I just was wondering, what data you have to back up that nobody is operating in the U.S. anymore.
Meaning those that were operating in the U.S. From offshore, 2-3 years ago, obviously they were just pretending not to be in the U.S., but everyone knew they were. Over the last 12 months, they've actually stopped doing business in the U.S. for the most part, right? I mean, they have pulled back. Every U.S. fund, every U.S. entity has been kicked off of these exchanges.
Who are you talking about specifically? Because no one's operating in the U.S. anymore is a very big statement. So I'm just curious, who exactly you're referring to.
OKX, Huobi, Binance, Deribit. All these places have gotten much tougher with their KYC, with their AML, with identifying that it doesn't really matter if you're an offshore fund. It matters who your principals are and where they live. So there's been a couple of choices that every fund and every U.S. person has to make, right? One is you move abroad, which there are a lot of teams, anecdotally, who are doing that, who are moving, if not their entire team, certainly individuals in their team. Or two is you just stop using those exchanges, right? There are services being set up now that are basically acting as middlemen to give people access to offshore exchanges because they've lost access themselves, right? Again, this was not the case in 2019, 2020. It was very easy to get on an offshore exchange. It is very difficult right now. So those that, you look at the Binance case with the SEC right now, for example, everything's from 2018 to 2019. There's nothing recent in there. So what are you going to do? It's the same thing as Tether. Congratulations, you did something wrong 5 years ago. You pay a fine and you move on. It doesn't really affect anything that they're doing today. So my point here is that it's not that there aren't people in the U.S. focused on digital assets and blockchain and crypto. Of course there are, but there's no new business happening here right now. New business is happening abroad, and people in the U.S. who had setups pre 2023 are largely having to change their workflows and changing their counterparties.
All right. And lastly, a slew of tokens were mentioned in both the Binance and Coinbase lawsuits. BNB, Solana, Cardano's ADA, Polygon's Matic tokens. They are all alleged to be securities in both of these lawsuits. Where do they stand now? What's your outlook on these tokens?
I don't care. Call them all securities for all I care. I mean, there's nothing illegal about being a security. We trade securities all the time. We trade stocks, we trade bonds. It'd probably be better off if you called everything a security. But if you're going to do that, the SEC, if you're hell bent on calling everything a security and being the regulator for them, then you have to make it cheaper and easier to get licenses to trade and issue them. I don't share that view with others. I'm sure people who are issuing tokens obviously don't want them to be called securities because then it's going to be much more expensive for them. Those who have exchanges that allow you to trade them don't want them to be called securities because it invalidates their entire business model and will force them to go through hoops of licenses and paying fees and all that kind of thing. But for those who actually invest and buy and trade this stuff, it's irrelevant. We trade securities all the time. There's nothing wrong about it being called a security. It just means that it's impossible to do anything with right now because there's no place set up to trade securities right now.
All right, we're going to have to leave it there. Jeff, thank you very much for joining us this morning.
Sure. Thanks for having me.
That was Arca Chief Investment Officer Jeff Dorman.